What are the monetization strategies available to a financial sponsor for a LBO holding? There are 4 common exit strategies for financial sponsors in an LBO investment. The first and most common is the sale of the business to a third party, either another financial sponsor or a strategic investor. The second strategy is an IPO, an initial public offering of the business, and the eventual monetization of the partner's holdings. A less common strategy is a dividend recapitalization, whereby management, if the company is healthy and has paid down a substantial portion of its initial debt, takes on more debt and pays its equity partners a dividend with those proceeds, the funds that were raised from the debt offering, the new debt offering. The final strategy, which only works during downturns in the business cycle, is the repurchase of existing debt at below par. This strategy works when the company continues to generate decent cash flow while the bond market turns down. The equity sponsor can buy back the bonds that were issued at below par in confidence that the company will meet its debt obligations, thus leveraging its overall returns. This is very uncommon, but there are some scenarios where the financial sponsor, who is most familiar with the business that they own, is confident in the cash flow that the business will generate, and therefore assumes that, okay, the economy is not performing that well. The bonds that we issued initially to acquire the business are trading below par. So let's acquire those bonds. And as we pay back the bonds that we just bought, we know that we can pay them back. So we're just leveraging our returns. It's a very, very interesting way to leverage returns that really not a lot of private equity firms use.